Hi! Chapter 2 expands the tax formula we introduced in Chapter 1, introduces some new tax concepts, and looks in a bit more detail at Form 1040. There are some concepts that you should spend extra time on, and you'll realize that as you see this because they're kind of sticky. So you want to spend some real quality time on language and understanding the terminology that's used. But first, in 2017, when President Trump signed the Tax Cuts and Jobs Act, you might have heard about it, it was a big deal. It made tremendous changes in the tax code. It made tax reporting easier and moved the vast majority of taxpayers from what was known as itemizers, in other words, itemizing their deductions, their expenses, to taking just a standard deduction because it was easier and it made more sense. It'll be a discussion topic in the future as it seriously impacted federal revenue. You'll find a link to a simplified explanation in the 411 module that I explained in the introduction. So, Chapter 2 has 6 learning objectives, and you can see them on the screen here. So we've got describe the expanded tax formula and the components of the major sections of Form 1040, determine the proper filing status, determine dependents, determine the standard deduction, compute the amount of tax due, and determine what interest and penalties the IRS can assess, in what instances certain penalties are applicable. So the big ones you'll probably understand are these, 2, 3, and 4. And that's where a lot of the language is. So, for learning objective number 1, this was the formula that we looked at in Chapter 1. However, this is the formula we're going into. So you'll notice, before it was just income minus permitted deductions from income equals taxable income. Now we're taking gross income, subtracting some deductions that are permitted from the gross income, giving us what's called AGI, the adjusted gross income. We're going to subtract from AGI the standard deduction or the itemized deductions, depending on what you qualify for. And that gives us taxable income. The taxable income times the appropriate tax rate will give us the tax liability. So you can see how we expanded this considerably. After figuring out the tax liability, we're going to subtract some credits and add some other taxes. Subtract the payments. Now this is the stuff that comes off your W-2. And that'll give us either the tax refund, meaning we paid too much, or tax due, meaning we didn't pay enough. So now we move to learning objective number 2. And that's calculating or figuring out what our filing status is. Well, there are 5 statuses. Single. A single person, taxpayer is not married, does not qualify for head of household or qualifying widow status. Then there's married filing jointly. Taxpayer must be legally married as of the last day of the year. Joint filing is permitted even though only one spouse earns all the income. C, a surviving spouse can file jointly if he or she has not remarried as of December 31st of the year the spouse died. Or D, if one of the spouses is non-resident alien, generally a joint return cannot be filed. So that's married filing jointly. Then there's head of household. There are several definitions for head of household, but basically, the taxpayer must be unmarried as of the last day of the year and providing principal place of abode of a qualifying person for more than half of the year. qualifying person can be a child or a relative. There's definitions for qualifying child. There's definitions for qualifying relative. This is where you really need to be careful, and you want to make sure that you read and understand what each one of the definitions is. Number 5, qualifying widow. Basically, a qualifying widow is a taxpayer who was eligible to file a joint return in the year that the spouse died. Learning objective number 3, dependents. Taxpayer can claim a dependent if the person is a qualifying child or a qualifying relative. Qualifying child meets certain tests: relationship test, the age test, residency test, support test, and the test for qualifying child of more than one taxpayer. Because if the child qualifies with more than one taxpayer, it can't go to both. It has to be one. The qualifying relative has these tests: not a qualifying child, relationship or member of household test, the gross income test, and finally, the support test. Learning objective number 4, the standard deduction. Standard deduction is the sum of the basic standard deduction and the additional standard deduction. Both components depend on filing status and are subject to annual adjustment or inflation. So essentially, what we're looking at here, if you're single, your basic standard deduction is $12,400. For married filing jointly, $24,800, obviously 2. Married filing separately gets the same as single, $12,400. Head of household gets $18,650. And finally, the qualifying widower or widow gets the same as married filing jointly, which is $24,800. So this is a lump sum that you get to deduct, as opposed to going through individual expenses and hoping that your itemized deductions are larger than the standard deduction. After that tax bill in 2017, that isn't the case for most taxpayers. For most taxpayers, the standard deduction, because of the change in the rules and what's included and what's not, the standard deduction will typically work out higher than the itemized deduction. Finally, besides being extra credit, students have told me that LearnSmart is an excellent teaching system. You might want to give it a shot and see if you like it.